Do you want to share the touching personal story that's in the book, or a
Yeah, well,
briefly?
briefly, my great grandmother came to the United States from the Ukraine. She was put on a boat at the age of 10 with five diamond stones sewed into her pillowcase and put on a boat by herself to come to the United States. I mean, it's really like a miracle that she, like the series of events that could have just either had her killed, robbed, not make it, not find her people when she got here, all of like these things, 10-year-old. And like, I say in the book, like maybe if Bitcoin had existed 100 years ago, when, they could have like taught her the 12 words as a song and have her sing it to herself as she, it's like such a compromising position to be in. Like, I almost can't believe my family started this way, with just, it was like a message in a bottle that got sent to the United States with some really valuable physical assets that a 10-year-old really probably shouldn't have been in custody of. First of all, you have to know what the hell Bitcoin is, why it is valuable to people. And for
Mm-hmm.
companies, what I really needed them to know is that it's individuals that give Bitcoin value.
Mm-hmm.
Institutions that think they give Bitcoin value tend to fail pretty hard, right? And sometimes they take their whole industry out, right? Some of these companies have done damage to their industries, not understanding that they serve customers, they serve individuals, and it's individuals that give Bitcoin its value. And I say that meaning like, to an individual like myself and many, Bitcoin represents hopes and dreams that I can have that for my family and for myself and for the future. And for an institution, it's just a CAGR.
It's starting to look like this Bitcoin thing is here to stay.
Welcome to the Why Bitcoin Wins podcast, brought to you by Beaver Bitcoin, the easiest way to buy Bitcoin in Canada. Head over to beaverbitcoin.com today and check it out. Today I'm joined with Brian Herschfield, author of Bitcoin for Institutions. Um, Brian, welcome to the pod.
Thanks, man. Great to be here.
Awesome. So, Brian, the way that we like to do this is the show is called Why Bitcoin Wins. And
Okay.
we try to figure out why our guests think that Bitcoin wins, and in your case, also why you then went on to writing a book about Bitcoin. So let's start there. So I'd love to, get started with, asking you what is your origin story? Why did Bitcoin pique your interest and then become something that you believe will win?
All right, great. So my origin story, I guess, is tied up in the fact that I had a career as an actuary and a quant financial engineer, and I was advising pensions insurance companies. And I'd say most of my career was characterized by what I would call mostly failure to do what these companies knew what they were supposed to do. So, like in the early 2000s, when rates were really were high, we were working on something called liability driven investments, which sort of just discovered that your pension, you say you have your $1 billion pension plan, and your liabilities have like really large interest rate risk, right? Like you go down 100 basis points and your liabilities go up by 12 to 15%, right? And that's a lot of money. It becomes a big hole. And discovering that, like, we weren't the only ones to discover that. Everybody understood it, and yet, at least in the United States, like nobody wanted to do it. Nobody, so nobody wanted to do the solution, which is like run a rate hedge, right? Either run a rate hedge or invest in long bonds, which is what they did in the UK. And 20 years later, that didn't work out great. However, it worked out great for 20 years in terms of hitting the liability benchmark, which is what institutions are supposed to care about. So like if you're running a big pension plan and you beat the S&P, the S&P goes down by 20% in a year and you beat it by 1%, like who cares? You didn't help your solvency, you didn't help your ability to pay out the policyholders, right?
Hmm.
Really only defending against the thing that causes your liability to go up really is the thing that helps you. And so in my career, I dealt with a lot of these companies that would say, yes, we know that's the problem. We just can't solve it. We can't implement the solution to solve it. And there's so many reasons why, right? But they all ring true again as a Bitcoiner in the same field. So like, it's almost like you just keep seeing history repeat itself. It's like, here we are again with institutions in holes, desperately in need of capital. Let's say pensions, insurance companies, desperately in need of, a way to make sure they can stay solvent.
Hmm.
And don't consider Bitcoin at all. I mean, as let's say far out as 2 or 3 years ago, absolutely unheard of. Like you wouldn't even
Hmm.
suggest it if you wanted to be taken seriously at all, right? So, I just sort of found myself 30 years into this career with, okay, what good is it to know what good is it to know what to do when you're like the only one? And is it me? Am I like just failing to get across, the benefits of doing this? Or, I don't think that's the case. There were so many people in the LDI, liability driven days, that just absolutely told us why they couldn't do it. I mean, there was incentives, accounting rules, all of these things that you hear about today in Bitcoin.
So what year is this? Like what year are you having all these thoughts that you're talking about?
So around 2024 is when I really was when the beat when like I guess so when the Bitcoin, I haven't gotten to like why I got into Bitcoin, but like I guess why I got into Bitcoin had nothing to do with professional issues at all. In fact, my professional life probably kept me from taking Bitcoin seriously for a really long time. It's just one of those things where you just dismiss it. And it was 2021, like when the world was on fire, and I really saw people using. I saw them people desperate for freedom and using Bitcoin to get it.
In
And I just had
2024.
in 21,
In 21.
right? In
Right.
21, when I saw people fleeing their countries,
Hmm.
basically, like, I still didn't care about Bitcoin, but I basically said, man, people really want this and they want what it provides. And, like, everyone in the world at some point is going to need this, I think. And maybe, like, I was developing, like, an investment thesis, right?
Hmm.
With just, like, oh, you know, everyone's going to eventually want this
Hmm.
because it's so powerful.
Right.
And then at some point, the more I thought about it, I was like, I might need it. Wait a second. And then it started to make sense. I started to learn about it. I'm like, oh my God. Like,
The main thesis being cross-border. Like you may have to flee your country at some point is what,
yeah, you might
right.
have to flee your country and there's no, and it's, so that was like way before the debasement
Hmm.
properties started to make sense to me as well. So like the thing that got me in was like having to,
Self-custody.
yeah, but the ability to have a bearer asset that weighs nothing and that you can, drive, you can basically walk over a border. It was,
That was the
I
thing
still,
that, right.
yeah, and I still
Yeah.
think that's probably the most powerful feature of Bitcoin there is. And I think like the best excerpt I put in my book was really a touching personal story about that. But, then you learn more about it and you're like, okay, this might apply to me. Okay, I actually have worried about this. So like,
Mhm.
this actually could be.
Do you want to share the touching personal story that's in the book? Or a
Yeah, well,
briefly?
briefly, my great grandmother came to the United States from the Ukraine. She was put on a boat at the age of 10 with 5 diamond stones sewed into her pillowcase, and put on a boat by herself to come to the United States. I mean, it's really like a miracle that she, like the series of events that could have just either had her killed, robbed, not make it, not find her people when she got here, all of like these things, 10-year-old. And like, I say in the book, like maybe if Bitcoin had existed 100 years ago, when, they could have like taught her the 12 words as a song and have her sing it to herself as she, it's like such a compromising position to be in. Like, I almost can't believe my family started this way, with just, it was like a message in a bottle that got sent to the United States with some really valuable physical assets that a 10-year-old really probably shouldn't have been in custody of. Right. So like, I think about this stuff. I've thought about this stuff my whole life. And that was the crag that Bitcoin snuck in that got me to learn more. And then, you learn the 21 million, you learn the debasement properties, you learn all of these other things. And, now all of a sudden, oh my God, it's, now it's like, oh God, I'm in a race against time to really learn this thing.
Right. So 2024 is around when you wrote the book. When was the book published?
So my chronology then, so the chronology is 2020. So 2022 officially is when I bought my first Bitcoins, like when I bought my first sats. So I call that my Genesis moment. And then in May of 2024, so from 2022 to 2024, I became increasingly annoying at my fiat job, which was I worked for a very large insurance company, managing hundreds of billions of dollars of investment risk. And when the ETF got approved, which was like the middle of 23, when BlackRock, basically it didn't get approved, but when BlackRock said they were going to do it, that's when everything opened up. And I started thinking about all of these things we should be doing in that company. And I got very aggressive about it. And then in May of 2024, I had what I called my exodus moment, which is my company had enough, and we had a mutual separation. And so I became...
How long were you at this company?
Independent. I was like over 10 years, and in that field of managing hedging for investment guarantees, I was doing that for about 15, 20 years. And it was a brand new industry that I saw pop up. So it's, again, like I look at the Bitcoin industry. I've seen so many of these things. I've seen a lot of these things happen already. I've seen brand new industries pop up around a brand new asset that has a lot of risk. But I remember the moments of capitulation and I know that's going to happen here. But you just got to put all these pieces together. So 2024, I leave the company. I have all these ideas. But I have to tell you, I'm very down on institutions, not because of my experience with my company, but in general. I used to recoil at those Twitter engagement posts that would say, like, how would you feel if you woke up in the morning and Facebook put $1 billion of Bitcoin on their balance sheet? Like 2020, like 22 through 24 was like the peak of that type of engagement. Don't miss out on this. And I remember seeing those posts and thinking, how would I feel? I would feel really bad for Facebook. I'd feel really bad that they got strong-armed by somebody into doing something they didn't fully understand. And I would be waiting for like the bomb to go off or the grenade to go off. And it might end up. That was how I was very bearish on institutions, I'll just say. And part of it was my experience with my company. I just saw the barriers. Like, it was very hard to have any real conversation about Bitcoin at the company. Very, very difficult. Like, if you wanted to talk about any nuances like custody, like particularly whether or not you might want BlackRock or Fidelity as your ETF provider, it would break their brains. So, like, I just saw how hard it was. I knew it was going to be really, really difficult. And in my mind, I knew the whole Facebook scenario was never going to happen. Like it was never going to happen unless there was some type of external force. Um, and then like, Microsoft had a vote. I don't know if you remember this, but like there was like a vote,
Yep.
and I remember thinking, "Oh, please don't let this vote pass. This is like disaster. Some annoying activist investor is forcing this vote." And can you imagine if they voted to do it, and like what they would have, like what would they even have done? And so these are the thoughts in my head.
Yeah,
Like,
Saylor had presented a 3-minute presentation to the Microsoft board, right? And then I think 97% voted no or
yeah,
something like that.
but I
Uh,
think
so
that that
yeah.
demonstrated competence to me
So
on
why do you
Microsoft's part.
think, like, when you say, oh, um, I would hate for them to have done it because what would have happened now, or what would have
Yeah,
happened? So what do you mean when you say that, it would have been so bad for Facebook or so bad for Microsoft to have Bitcoin on the balance sheet? Why would it be so bad?
because they don't know how to do it. They don't. If they're going from zero to something that takes a lot of skill and competence. And it's not just in the competence of holding Bitcoin. It's the whole process of knowing why you have it. Um, so if we back up a second, right? Think about an individual. Okay, just think about yourself. It's hard. I mean, most individuals can't hodl Bitcoin. You have to like. The reason we're able to do it is because we don't report really to anybody, and we can tell people, I know everything. I know it looks bad, but I don't care. I know, I have my reasons, and
Hmm.
I'm going to continue to do this. In fact, as we sit here right now, I'm sure many people are having that actual conversation with people right now, right?
Yeah,
Like you
right
have to
now,
be,
Bitcoin, today we're recording on Feb 5th,
yep,
2026. So, Bitcoin price is what, 66,000 USD right now, down from 126,000. So you're saying, the psychology, obviously, of hodling is not easy for even individuals, because you're having all these conversations about, and a lot of people are telling you that you're doing the wrong thing. So
yeah,
that would,
and they're
so inside a,
pleading with
inside a,
you. They're pleading with you to see the light here,
right, and inside
and
a company, it would just be amplified even more, because as an individual, you're not reporting to anyone, but in a company, there's multiple people to convince.
yeah, I mean, I think like if you're an individual versus in a marriage,
Hmm.
a second person makes like raises the bar exponentially.
Hmm.
Every additional person raises the bar exponentially, and then you have governance, you have quarterly meetings, you have committees, you
Hmm.
have people that will use circumstances that look bad to get you fired, right?
Political, yeah,
I mean, it's like
right.
there's
Politics
no
inside the
there's like no
organization.
way. Yeah, I mean,
Right.
like so in my mind, my stupid little mind, I was just like, I don't ever see this happening in big corporations like this, like almost ever. Not in the world we live in, not in the way people view the world right now. And I saw it on a smaller level where my daughters go to a Waldorf school.
Hmm.
You have them in Canada, not, but you have a lot of them in the United States. And I don't know. I was able to get that school to accept Bitcoin. It was like a year long process.
What
With
school is this? You said Waldorf School, is that
Yeah,
right?
Waldorf.
Waldorf.
It's like there's like several hundred of them in the world. Um, like Montessori type, like like that's the overriding curriculum and ethos, and then the schools run independently. But
And you convince them to accept Bitcoin.
yeah, so my daughter's
Just for you,
school.
or just for you, or for like as a
Well,
general rule?
for anybody,
Okay.
they set up like an unchained vault. Like they set up a vault, and I've paid now in Bitcoin for a couple of years.
Hmm.
I'm the only one who does it,
Okay.
but my experience in getting them to do that was very very difficult. It wasn't so. I had a very motivated dean who was a very strong, solid Bitcoiner, but he had a board that like the board was a problem. And like once you got to the board level, like so for example, he had gotten permission from a finance committee to invest in whatever he wanted, and so he asked for to be able to use Bitcoin. Like fine, and then he stacks a bunch of Bitcoin, And then the board finds out and they had a conniption and almost forced them to sell all of it. And now they're at the point where they're required to sell any new Bitcoin they get. It's pretty disappointing because I wanted this for them. I wanted this so that the school could have Bitcoin. And, now they're selling any new Bitcoin they get. So all I'm saying is like these experiences informed, like I just see it at all levels. It's really hard in groups, in institutions to get this done. And I think 6 months of grappling with this in my unemployment, I had a light bulb moment where I realized I might be able to make a difference. And so I thought if I could write a book that explains to a company, let's say there's a sincere company that really does want to, use Bitcoin or does want to enter this space. Can I tell them everything I need them to know and then give them all the solutions? Like I didn't want to just give them the answers because I feel like the setup is really important. So the setup is the reason why it'll fail. Like the setup is, you need to understand why at an institutional level you will be in this for at least 4 or 5 years, right? And then once that's set up, then we can start talking about the actual solutions, which in my view, I wrote the book before the whole paper Bitcoin summer, before the treasury companies became a big thing. Focus of my book was not holding Bitcoin in your treasury. That was like almost a small paragraph, maybe a small chapter. But like if you look at the spectrum of things you can do, I find holding Bitcoin in your treasury to be pretty far out on the risk curve. Like you got to have competence. You have to have some people in the company that know how to custody Bitcoin, know why. So like I was focusing on much lower risk.
Why is it?
Strategies.
Why can't they get a third-party custodian and just make it easy?
They can, and that's probably what they should do with a roadmap to ultimately self-custodying, right? So Bitcoin on your balance sheet is now, but now you're managing you're like managing at a governance level a decision as to whether or not you're going to use a third party or you're going to hold it yourself. And if you are going to use a third party, who at that company actually knows how to vet that company, right? It's I don't even know if that is on the skill level of what most institutions could do right now. I don't know if Facebook would be capable of, I think they're Meta now, but it would be very difficult even for them to agree on a custodian, I would think, right? And so it's like more of a roadmap. It's more of a roadmap thing where let's build. If you're being compelled by a board, an activist investor, like let's figure out ways you can deliver wins while you're learning and growing your legs and learning to crawl, and then learn to walk, and then learn to fly, right? So that's really was the point of the book. The book was to say, here, first of all, you have to know what the hell Bitcoin is, why it is valuable to people. And for companies, what I really needed them to know is that it's individuals that give Bitcoin value. Institutions that think they give Bitcoin value tend to fail pretty hard, right? And sometimes they take their whole industry out, right? Some of these companies have done damage to their industries, not understanding that they serve customers, they serve individuals, and it's individuals that give Bitcoin its value. And I say that meaning to an individual like myself and many, Bitcoin represents hopes and dreams that I can have for my family and for myself and for the future. And for an institution, it's just a CAGR, right? A CAGR, a CAGR, which is like not trivial. It matters to that institution, but they're never going to care. Like they're never going to care about it as much as I'm going to care about what Bitcoin can do for me. So I'm always going to care more. It's always going to be more valuable to me. And I think in the long run, I'm always going to outbid an institution for Bitcoin because it's always going to be more valuable to me. And if it stops being valuable to me, I think the institutions better worry. So I talked about the Canadian trucker protest, which I thought was a great example of why Bitcoin, demonstrating why Bitcoin is valuable to people, which is like, because it really does represent, it's the only form of money that got to the truckers. So like, it showed the permissionless nature of Bitcoin and the ability to actually do with it what your will desires. But the point I made was that if you're like a CIO, chief investment officer, if Bitcoin stops being a vehicle for freedom for people, the investment case is gone. And I want CIOs and CFOs and CEOs to understand this. I want them to understand that if it stops being valuable to an individual in the way it is, and it just becomes a CAGR, that CAGR is going to be zero, right? You're just going to be holding 21 million worthless tokens because it's what it does for people that makes it valuable. And I really, really wanted people to understand that. Then I gave examples of Michael Saylor and Larry Fink and what I think Bitcoin means for them and why they started to use it in their companies. And then we got into the actual solutions, which, in my opinion, are much less risky and much more approachable and available to companies at their current skill level.
Right. So if you're talking to a CIO, what's the number one thing that you want them to remember from your conversation, or what's the most important thing? So you mentioned crawl, walk, run, fly approach. You mentioned that they need to understand Bitcoin. They need to understand that it's for the individual. What is the, biggest barrier, I guess, or what's the number one thing that a CIO needs to know to get started?
You don't have to like Bitcoin, just like you don't have to like semiconductors to know they're valuable. Right? To know that NVIDIA is a valuable company. You don't have to care really for yourself about this thing. You have to just understand that it's a big world and there's 8 billion people and a giant total addressable market of people that will go to the ends of the earth to make
But do you
sure.
think it's possible to believe for your company but not believe for yourself? Do you think it's possible that
Yeah,
you can
sure.
be someone who's not a Bitcoiner and
I
you
do.
okay.
I do. It's just the same way they don't have to use Apple products to own Apple stock. If you can just see in the world that it's like, you see the thing that I saw initially before I applied it to myself, which is just like everyone in the world wants this and it's super valuable to them, and it's scarce and it's only going to get more and more valuable to people. The more it gets adopted, the more it gets used, and the more people can see what it can do for them, it's only going to become more and more valuable.
Right.
And that's like a guy, a 90-year-old on his deathbed, I think, is capable of seeing this.
But then wouldn't that convince them to just become a Bitcoiner? Or have you
Perhaps I'm just saying it's not necessary. Like I don't like I feel like that's the barrier a lot of these executives have. They don't want to be branded. They don't even they're like, well, I'm not like one of these people. I'm not like these lunatics on Twitter. I just think this is a smart thing to do for my company.
got it?
Right? And I think we're going to get a lot more. We're going to get a lot more traction that with those types of people. And I actually offered a lot of strategies that would appeal to somebody who doesn't care. Right? It's like you don't have to care. You don't have to care about it at a company to benefit from it and to have people benefit from it. It's just
Got
not.
it.
It's unnecessary. It's not. It's nice, I guess. It's nice for us to see. It would be nice for us to we all want Michael Saylor to be a Bitcoiner. We all want. We all get upset when he says things that maybe indicate that he's more like the fiat guys. But the reality is, it doesn't matter. It doesn't matter that much, and it's not supposed to matter that much. It's really not. It is. In the long run, MicroStrategy is not going to hold 800,000 Bitcoin in the long run, and they won't be able to. In the long run, the people who value it most will have the Bitcoin. Now that is going to, that long run's a long way out, right? Again, CIOs are supposed to think a long way out.
So why would Michael Saylor ever have to sell any of his? Why would strategy ever have to offload any Bitcoin?
They'll be required to if they're being bid high enough for it. That's
By
just
whom?
like any asset they own. If the board will require, they're required. They would be probably required at a certain price to not, at a certain price above market, like that if it's being offered. This is all in my imagination right now, right? But like there is a world where they're being offered ungodly amounts of money for their Bitcoin. They're not going, they're going to sell it at that point in time. Their board will, in fact, they're a public company, right? So this is like, the downside of a public company is they're impossible to do anything good with governance. But the upside is once it's up and running, the governance does ensure that it ensures they act rationally.
So your long-term bet, and when we say long-term, how would you define that? Like what would you say, 10 years, 20 years, 30 years? At what point would you say that MicroStrategy/Michael Saylor are going to have to offload some of the Bitcoin off their balance sheet?
It's a hard one, but like it wouldn't shock me in 20, like if we got to the 20-year point. Let's just say that like I think there's scenarios where they're compelled to do it much sooner. But, in this scenario where we all think, I happen to think they're very good at what they do, and they're not, there's a long way from ever being in any trouble, like in my opinion at least. So yeah, I could see it. It's another generation or two that we start to see, we do start to see them move into another phase.
So when it comes to institutions, do you believe that the best thing an institution can do is hold Bitcoin on their balance sheet, or you mentioned multiple other strategies? What is your number one strategy that you do share with a CIO if they
Yeah.
want to if they want to get their feet wet into Bitcoin?
The lowest hanging fruit are deferred comp. I don't know what it's called in Canada, but it's something. I know like Scott Dietl's company is starting to roll that out in institutions. But basically deferred comp is like we have 401ks here. I think you guys have, it's called something else
RSP.
again. Yeah,
Yep.
RSP, that's right. So like it basically allows people who earn above the limits to continue essentially that program, but that at the credit risk of the company. And so you can offer Bitcoin as an option in that plan and use the ETF to essentially deliver it. And that's a really low risk, low hanging fruit, sort of no brainer thing companies with large amounts of employees should be doing. Enhanced mutual funds. I'm really surprised I haven't seen enhanced mutual funds, would just be like take an S&P index fund and just add 1% or 2% of Bitcoin to it, or 10. Like it's just there's a chart in my book that over the 5-year period, only 1 year, the one that ended with 22, was the one that like had really no performance, and then all the other years were just like thousands of basis points of outperformance.
So
Just
that
by
would
adding,
be, yeah, so that would be equivalent to just adding 1 or 2% of your treasury into Bitcoin.
yeah, but then you do it in a mutual fund, and you let the mutual fund worry about all the back end stuff. So like BlackRock should be adding this to all of their funds. You would think BlackRock would have an entire fund lineup of IBIT plus S&P at whatever whatever allocation people would want, right? Or lifestyle funds where if they're a certain age, if they're young enough, maybe it's 20%, and then it grades down. The way that those lifestyle funds worked. So those are really easy things that I'm surprised I haven't seen yet.
Mm-hmm.
The other thing I emphasize is making sure you're not short. You don't find any Bitcoin exposure in your shorts. So institutions do, a hedge fund, just standard, does a lot of shorting. Let's just say FANG stocks. You buy the FANGs, but you short the NASDAQ 100 against it because you only want the alpha of those stocks, right? So it's a common strategy, right? You buy FANGs, you short the NASDAQ 100, and you just chop off that alpha over and over again. Well, one day in 2024, a company called MicroStrategy ended up in the NASDAQ 100, right? This company had 2x'd itself 7 times in the prior,
Right.
like
So if you
3 or
were
4
in
year period.
the FANG shorting the rest of Nasdaq 100, you got caught shorting MSTR and you got
That's
wrecked.
right. Well, I don't think anyone's gotten wrecked from this yet, but like because
You just lost out on the alpha. You didn't get wrecked, but like you didn't do well.
the scenario very much exists to get wrecked, and it would because I mean, like if you're doing that today, and MicroStrategy is at like what 110 right now, so it's something like 3/4 of its all-time high. It's a double problem. One is you have a short that is highly volatile that obviously can cause losses, right? The second real problem with it is it's such a small part of the portfolio that you don't even really know it's in there. And when you have, like, if you run one of these funds and you have this performance that doesn't make any sense, you're not going to look at something that only has a 0.5% allocation in the index. You're going to look at you're going to look at the big ones. You're going to look at the performance of those big positions to try to explain it. So you might, and then MicroStrategy or strategy may 2x again while you're trying to figure out this needle in the haystack. And so I think I said in the book, I hope this book actually saves the jobs of some people working for these hedge funds, just because you'll at least know where to look if the performance starts looking really strange, right? Like maybe you did well, but not nearly as well as you should have, and you have no idea why, and you cannot explain it to your managers.
Got it. So, Brian, we met at the Canadian Bitcoin conference in
Yeah.
Montreal in October, and I saw you on stage. You and Larry Leopard were on stage at the same time. Um, have you attended many of these types of Bitcoin conferences and spoken at many of these? And has writing your book gotten you more of these types of speaking gigs across Bitcoin conferences? And how does this entire thing work?
So I have to shout out, Andrew Carlin for letting me speak in Canada because that was my first time getting to speak at a conference. I went and I had no real, you know what I mean, REEL. I had no reel or I had no like video to send to anybody, so there was no way to vet me or anything like that. He just really took a chance, and so that is how that particular conference happened. And then quickly I got to go to Prague the following month at something that they called BTC Corporate Day, which was an incredible experience. And there's no way I would ever miss one of those. It's like small and focused on the corporate stuff. Really, really excellent. And so now it's starting. Yeah, it's now starting to boil. Right, where I'll be speaking at the Bitcoin conference in Vegas,
Oh,
Bitcoin
nice.
Ireland. Yeah, Bitcoin
Awesome.
Ireland in May. So I guess, you start somewhere, you find somebody, you pound the pavement until somebody gives you a shot.
So how did you pound the pavement? What was your process?
I was just annoyingly asking everyone I know to put me, it's like, I found out a friend of mine knew Andrew, and, God, I feel like I'm not getting his name right, but, because I know another Andrew Carlin. It's Dan Carlin.
It is Daniel. It
Sorry,
is
Dan.
Daniel. I was wondering who Andrew was. I thought maybe someone I don't know, but
He's somebody I just
yes,
doxed in my meetup,
right,
my local meetup.
right.
Dan, a friend of mine know Dan, and I'm like, dude, please see if you can just get him to give me a shot. And you know what?
Yeah, he's great.
I'll say for myself, I read Larry's book twice to
hmm
prepare for that interview.
I think you said that on stage.
Yeah, and
Yeah.
it was so fresh in my head. Yeah, like I was I guess I was proud of my preparation, and I felt like when I watched the video, it looks really good. I'm proud of it, and I'm really glad of the work I did.
Yeah,
So
it was
like you
great.
pound the pavement, and then you prepare like hell, and you do your best, and then you just gotta then see what the world gives you at that point in time.
Then, once you did that one conference, other conferences started reaching out. How did that happen?
Well, so I had because I wrote the book. There was another guy who wrote a book who came across my book and said, "You want to do a panel with me at Prague?" And I'm like, "Yeah, great." And he goes, "Great. Send him over whatever video you have." And I'm like, "Ooh, I don't have anything yet, but I'm about to do this Canadian thing. If you can just wait." And then so that's just how that worked out. And then it's one of those things where if you keep the energy up and you keep asking, and now that I have these videos to send, I just send them to everyone. Anyone who's a conference organizer, I send it to. And, sometimes they say yes, sometimes they say no, and you just keep moving.
Makes sense. So, and you do a lot of Bitcoin meetups as well. I know in your book you mentioned, you would go to Bitcoin meetups and you would hash out or brainstorm what to kind of put in the book or what your ideas you were thinking about. So, are Bitcoin meetups a big part of your life? Have they been for a
Huge,
while? Okay.
huge. So when I got into Bitcoin, I was annoying everybody I knew. And it's kind of funny that Swan Bitcoin was still around. And I remember calling them, I listened to that podcast and they said, "Oh, if you have any, if you ever want to start I don't know, Swan Private or anything like that, like call us up." And I called them up and I just started bouncing all of my ideas off of whoever this was. And they were like, "Dude, you need to like go to a meetup." Like this is a business call. I'm interested in the things you're saying, but you really just need to go to a meetup and talk to people. And so
hmm
I found every meetup.
You just wanted to talk to Bitcoiners,
Yeah, I was so
right?
desperate to talk to Bitcoiners.
hmm
So I went to every meetup within 2 hours of where I live,
Right.
and was starting to become a regular there. And then my first podcast partner was out of one of those meetups, and then I started one in my hometown. And my whole community, everyone who edited the book, everyone who helped, launch everything, came from my meetup community. I mean, these are
hmm
people you show your face to every month for years, and you're in telegrams all day long arguing, and you have a life with these people. So I'm very, very bullish on meetups.
And working with Bitcoiners in general.
Absolutely. And especially like a day like today where price is getting beat up. My friends are like, we're not. It's not even like there's not even cope. It's just like, oh, what are you working on?
hmm
We
What do
might
you?
just
Yeah.
acknowledge that we're in a little bit of pain, and maybe some of our friends are in pain. But like, what are you working on? What are you building?
Yeah, it's funny with the price, it's like I always think about back in, a couple of years ago, Bitcoin was between 7,000 to 12,000, and that 12 to 7 drawdown feels the same as 120 to 70, 120 to 65 feels the same, right, as a percentage. And so, what can you, and if you weren't planning to sell today, then why does the price matter, right? So it's so much emotion and psychology, and it's so much better to just focus on building.
Yeah, and it's like part of the competence of an institution is knowing how to navigate these environments. So, I mean, I wrote a lot in the book very specifically about why does the price go up when it goes up? Why does it go down when it goes down? And I think the situation we're in now is it's fairly typical of liquidity. Bitcoin's the first asset that gets sold because it's the most liquid, it's the easiest to sell, especially
hmm
when markets are closed. And you don't necessarily know why the bigger fish are doing what they're doing in the world, but we do become collateral damage pretty quick. And that happens for a time. And then, if there's leverage, it's worse. And so we don't know yet. Right now, as we sit here, we don't know if there's more to go because there's leverage. Maybe there is, maybe
Right.
there's not. But then at some point, it hits a bottom and it starts climbing again. And that's the process. Like I've always, in my TradFi career, I've always been a strong advocate to say you should never own an asset that you don't understand. You should know how to model the asset. Now, in Bitcoin's case, it's a little bit of an exception, but you should understand. You should really deeply understand the. Otherwise, you shouldn't have an asset if you don't truly deeply understand it. You can get wrecked. You know, like especially if you're managing a liability target or something like that. Like there's all kinds of places where something that happens and you don't really understand what's going on. You can get in a lot of trouble. So Bitcoin is no different insofar as you do. Companies need to understand it to be able to navigate situations like this. It's otherwise, it's going to be emergency meetings. What do we do about this thing? We have an asset that just, went down 40% this year. What do we do? Well, what did it say in the book? There's not a lot. Companies are not that. They're not strong yet with that muscle. So, that's another reason I think that as long as, like the deferred comp options and the mutual fund options, they're not exposing you to these conversations. They're just allowing you to implement a Bitcoin solution, and you don't have a P&L as a company over it.
But then they'll take 1% to do that. They'll take a 1% management fee, right? The mutual fund. So
maybe. I mean, that's fine. It's again, you got to crawl first. So like if you're running, you can charge a crawler some fees to do the work for them.
So, with Bitcoin price trading down lately, and with someone who's started buying aggressively, 2024 onwards, you may be underwater at the moment. So, what would your advice be to someone who is, underwater, and what would your advice be in general to institutions as well as individuals on navigating prices?
I'll start with individuals because that's really the ultimate building block, like the amino acid. If you're an individual and you see a value in Bitcoin for whatever reason, right? You probably need to be building your own strength. Okay, so it takes strength to be a Bitcoin hodler. It takes physical strength. It takes emotional strength. It takes intelligence. So, I think individuals need to always be making themselves better. I don't know that we were born or we were put in, we've all become adults capable of allocating capital, but not with the wherewithal maybe to deal with what Bitcoin throws at us. We have to become better people, right? One of my big focuses, I know a lot of people read, a lot of people fight, they train with guns, in the US at least. They train self-defense. One thing nobody emphasizes that I'm building very hard right now is also, I think it's really important to study math. And
21 million divided by infinite?
Well, that's one particular aspect of it, but I would say studying math is what gives you access to having conviction in your own ability to reason. And that's really an important thing if you want to be an unreasonable person about this one thing. Then you have to really that conviction has to be so strong that I think the FUD attacks are getting good. And we happen to be in the middle of all of them right now, right? I mean, so many, Quantum and Epstein. I mean, spam, and you just name it. The FUD.
Are they good? Are they good? Are they good? Or
some
are they?
Are good. Some are pretty good. Some are weak, and some are pretty good. But I see a lot of people falling for all of them and getting in trouble.
That's the interesting thing, right? When you say they're good, the good part is relative, but people are falling for them and people are sharing them and the views on them are very, very, very high. So it's very effective.
So I think the quantum FUD is very effective. And
Hmm.
it's because it's one of those things where it's like, oh, someday, one day, it's going to be a problem for sure. So you can't dismiss it, right? But do I have to be, you know, do I have to feed this industry that just wants you to be afraid and wants to live off your fear? No, right?
Right.
So the way to navigate that, I think, is learning the math. Because once you know the math of cryptography, then you can have agency in your how you navigate what you think that quantum risk is. So you can engage with. So I have a podcast called Magic Internet Math, and I've been doing podcasts to teach math now for over a year. And I was
We'll
telling,
link it. We'll link it below
yeah,
for. We'll have all of Brian's links in the description. So
yeah,
feel free to check all
awesome.
of those out.
But the purpose is to demystify the math and get people comfortable with being able to, being able to learn enough so they have some agency and they're not just trusting. They don't feel like they have to be a total second class citizen. I think a lot of the spam stuff from last year was just people acting out at the realization that they were second class citizens, but without really a good way to cope with that, right? It's like, yes, there's a group of developers that decide, what gets implemented, what gets maintained, and we're not always going to like them for a variety of reasons. And but in my observation is the most technical people sidestepped this issue or navigated it very powerfully, and the most not, really it's mostly non-technical people that got kind of swept up in the emotional engagement, kind of the engagement of it, which it's pretty heavy, like podcast, Twitter engagement on this thing that
Hmm.
got people very wrapped up in almost tribal, cultish. And I think ultimately some of them crashed out and got out of Bitcoin. And
Hmm.
so ultimately, to me, it's just a tournament to maintain your hodl. It's not just about being unreasonable. It's about being unreasonable in the face of you as an intelligent person, what you're able to contend with. And
Hmm.
so my point is, I think we always have to make ourselves more intelligent people,
Hmm.
constantly, 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 because these attacks might be lame now, but they're always going to get better, and they're always going to find the weakness.
Yeah, one day when Bitcoin crashes from 500K to 300K, the fun will be even better. Um,
For sure.
for me, Brian, the way that I am able to hodl is, just to convince myself to keep working hard and make as much money every month as I can, so I can keep buying cheap sats.
That's a
So
great way to do it.
what is, and I know you can relate to that. So, what are you most excited about in 2026? What are you working on right now?
So I've been working on my website called magicinternetmath.com. So I'm very committed to teaching math in general,
Hmm.
and I've found ways to really improve the UX of even what's out there now. And it's not just math. Like I figured out, so I have a website again, magicinternetmath.com. The website is pretty awesome UX for math courses, where you can basically take a math textbook and turn it into a really cool course with cool visualizations, quizzes, examples, stuff like that. But then, like the other day, I had this idea. What if I just threw Satoshi's 543 Bitcoin Talk forum posts and made a course out of that? And it did, and it's awesome. And now I'm able to do YouTube because the AI tools now are so powerful that I'm able to really now churn really excellent UX educational materials and turn it into an academy. That's what I'm working on. That's what I'm working on building. So I tend not even to even know the price. I'm just breakneck working on getting this out.
I love that. Thank you, Brian. That was the, big questions I had for you. Now we're gonna move on to my favorite part of this show, which is called the lightning round. And
Okay.
the only rule here is that it needs to be your impulsive response. One word, couple of words, just whatever comes to your mind first.
Okay.
Okay, are you ready?
All right. Yeah.
All right, let's start the lightning round. Brian, Burgers or pizzas?
Pizzas.
Coke or Pepsi?
Coke.
Bitcoin 2026 price prediction.
300.
Bitcoin 2030 price prediction.
5 mil.
Worst mistake a company can make when establishing a Bitcoin treasury.
Thinking that this treasury is going to save them, and not having
Actual
not having the integrity, the foundation to do it.
do actual work. Biggest misconception institutions still have about Bitcoin.
That it doesn't. It's like not money.
Self-custody or third-party custodian.
Biased self-custody always.
One Bitcoin book besides yours, Bitcoin for Institutions. Besides that one, every CIO should read.
It's not a book. It's a long essay, but it's called "Only the Strong Survive" by Alan Farrington.
Awesome, man. Okay, that was the end of the lightning round. Brian, congratulations. You did very well.
Did I win?
You won the lightning round. Congratulations. Any closing thoughts, comments you want to make for listeners?
I really appreciate you having me on. Being here with you takes me back to Canada from October, and I'm realizing how long of a time ago it was already. Time goes by really, like a lot of time goes by very fast. I'd just leave people with make the most of it. Build your dreams. Do not wait.
Love it, man. Thank you for coming. This was Why Bitcoin Wins.
Sweet.
Brian,
All right.
how was that?
That was good. I hope Dan's not upset that I fucked his name up.
Oh, no, I'm sure. He's such a sweet guy, man.
I know. I love him, man.
Yeah.
I do. I'm so grateful to him. I
Yeah.
can never repay him for giving me that opportunity.